If you aren't prepared to trade with surgical patience, you aren't an investor anymore. You are just providing the exit liquidity for the smart money. Look at the data hitting the wires today. Reuters is confirming that gold fell over 3%, not because the geopolitical risk has vanished, but because the nature of that risk has shifted. This is no longer a fear shock, it is an inflation shock. Oil is the real weapon in this macro cycle. Higher oil prices are reviving the ghost of inflation, and that is forcing the market to price in a higher for longer Fed path. Judgment. Gold is a non-yielding asset. It doesn't pay you to wait. When the dollar index strengthens and the real cost of capital stays high, the safety of gold gets temporarily crushed by the opportunity cost of holding it. The market hasn't forgotten the war. It has simply realized that the dollar is currently a more efficient bunker. To understand this, you have to look at it through the lens of an ancient siege. Imagine you've traded all your grain and cattle for gold coins to hide from an invading army. You feel safe until you reach the city gates and realize the gatekeeper is only accepting the local king's currency for entry, and the price of a loaf of bread is doubling every hour. Your gold is still real wealth, but in that specific moment of crisis, everyone is dumping their gold just to get the hard currency needed to survive the day. That is the carry math trap we are in right now. The war premium is still embedded in the system, but it's being cannibalized by the sheer strength of the US dollar. Now let's talk about the 48.50 zone. Reuters reported a drop to nearly 48.44 today, a one-month low that has left a lot of traders underwater. This is a brutal battle line where geopolitical fear is colliding head-on with monetary reality. If 48.50 fails to hold as a pressure zone, we aren't looking at a collapse, we are looking at a deep structural reset. You aren't buying a dip yet, you are watching a high-speed collision. Every second the Fed stays trapped by oil, the gravity on gold gets heavier. Don't be a hero in a vacuum. Look at the mechanics of the market right now. When the S&P 500 and NASDAQ are also bleeding, institutions face massive margin calls. They don't sell what they want to sell, they sell what they can sell. Gold is the most liquid, most profitable asset on their books from the last 6 months. They are using your safe haven as an ATM to cover their tech losses. This is why the price action feels so disconnected from the headlines. The news says war, but the order flow says liquidation. If you ignore this technical reality, you are trading against institutional selling that doesn't care about your gold thesis. The real threat is that the market begins to treat gold as a risk-on asset. Usually, gold and stocks move in opposite directions, but when they fall together, it means the entire system is hungry for dollars. The dollar is the apex predator right now. As long as the DXY is climbing, every ounce of gold you buy is fighting an uphill battle against the world's reserve currency. You are fighting the Fed, you are fighting the bond market, and you are fighting the global margin cycle. That is a war you cannot win with a single trade. So how do you actually execute? You peel the onion. Step 1, the first layer. You test the water at the 48.50 battle line with no more than 10% of your intended position. This is your scout. If the scout gets killed, the loss is negligible. You are paying for information, not a profit. Step 2, the observation phase. You do absolutely nothing until the dollar's momentum cools off. This could take days or weeks. If the market flushes further to the next structural level, only then do you peel the second 10% layer. Step 3, the confirmation. You only increase your peeling speed when you see a divergence, when stocks keep falling, but gold starts to hold its ground. That is the signal that the liquidation phase is over and the real safe haven demand is returning. The threat here is your own ego. If you go all in because you think you're smarter than the Fed's math or because you feel like it's the bottom, you will likely be washed out. The market doesn't care about your feelings, it cares about capital flows. Right now, those flows are headed toward the dollar. Final judgment. This isn't the funeral of gold, it's a violent, necessary repricing of a crowded emotional trade. The long-term case for gold remains intact because the world is becoming more unstable, not less. But the easy money phase is over. This washout is a reset of expectations. My final command to you is simple. Stop chasing headlines. Start calculating cost. Peel the onion, keep your positions small, and treat 48.50 as the front line of a long war. The market is making this entry as painful as possible to shake out the weak hands before the next real leg. Watch the dollar, watch the oil, and watch your back. The market hunts the over-leveraged first. Don't let that be you. Your job isn't to be right, your job is to survive. Peel the onion or get peeled by the market.